So, let us first complete few more problems in the currency futures area. Stop talking. Please, request. Now, let us complete few more. Stop talking. Silent, please. We'll complete few more problems in the currency futures. Then we will quickly go through the chapter mergers and acquisitions, where 3 problems will be doing or 5 problems will be doing together. Remaining problems we have the solution. I think the printed solution is given to you now when you come in. So from that solution we'll be discussing the problems. The chapter is a very simple chapter where I need not give very elaborate introduction. All the issues are already discussed, like PE ratio, EPS, MPS, etc. Based on that only the chapter will progress. So mergers will not take long time to complete. We will do within 8:30 whatever problems possible. Remaining solutions are there. One can easily understand it. Just to get the moment of doing a merger problem is important. Once done, last 10 minutes, I'll just keep for telling you the way in which we have to go about the preparation for the examination. I have given you along with the merger solution, SFM checklist has been given. Did you get it or not? No. So in that, what are all the concepts that are need to be revised when you go for the preparation has been given. If you are thorough with the checklist, everything regarding the subject would have been covered. 1 or 2 issues there I would not have done. What is that? I'll be telling you at the end of the class. Okay, please. 99.99% the checklist has been fully covered. 1% what is not done, I'll tell you. Some may be important, some may not be. Okay, please. Shh. Settle down, please. Shh. I want you to come in without creating any noise. Settle down. Let us have the session peacefully. Let us move the portions, please. I'm hearing voices. Okay. Now, morning we completed mutual funds. We started discussing about currency futures, where it is not a great discussion. It has been already discussed elaborately in the futures. Same cash market, futures market, hedging has been done in the currency futures. Only thing is, in that chapter we discuss about stock futures. Here we are discussing about the currency futures. That's the only distinction. Still one should have a practice of doing some currency futures problem. That's why we started doing the problems in that particular area. And another 45 minutes, we have to complete 3 or 4 problems in the currency futures. We don't have the writing time to be dealt with. You have to only look at the solution. That requires some concentration, some focus. I don't want any disturbance, please. Then it is irritating. I want full silence. Can I start now? And I want focus also, answer as the chapter is being discussed. Okay, now. Let us summarize what is done in the currency futures. See, a person is having a receivables in dollars, suppose after 3 months. Is he exposed to risk or not? Yes. How much the dollar will get converted into rupees is not known. It depends on the exchange rate fluctuations. People would like to have a certainty in the cash flows. So they would like to go for hedging strategies. The strategies used for hedging foreign currency risk are forward cover. It's a straightforward strategy. Money market dates, leading, lagging, exposure netting, currency options, currency futures, currency swaps. This is what we started our discussion in the first class. Wait or not? In this, everything has been discussed except for the currency futures, in which first sum has been already discussed in the today's morning class, and question number 7 I gave it as a homework, where the numbers are ditto similar. Instead of receivables we had the payables. I think, have you tried that sum or not? Okay, if not, you can try later. Can you proceed now, please? In that we are going to continue doing some problems. The next problem which I am going to do is little bit tricky, where home currency futures will be given, then we have to hedge the foreign currency receivable. Between pound and dollar, a problem is there, unique sum, same type of sum, but with the different numbers. For rupee and dollar has been given in the RTP. I gave one extra sheet on that day, or not? No. Then I noticed that same problem is there in our practice problem segment also. So we can use a practice problem segment, that problem to solve it. Those two are unique types of currency futures problem. We'll do those two sums quickly and then answer another two problems which are simple to answer and no calculation needs to be done. For everything, the solution is given in the sheet. We can follow the sheet for the solutions. Can I proceed or not? Now, we have been discussing that chapter, application of derivatives, in which first 6 sum dealt with the currency option, 7th and 8th sum has been completed now in the currency futures. Now we're going to go for the question number 9 for discussion. Everybody, can we start or not? Now please take question number 9. Okay. Take question number 9. Please. Shh. Today is March 1. In the question, a UK firm is planning to import chemicals worth $6 million from US. First tell me, which is the home country, which is a foreign country? UK home country and US is the foreign country. The home currency is pound sterling and the foreign currency is dollars. Can I or not? No. Tell me, they are having a foreign currency payable or foreign currency receivable? Payable. How much is payable? $6 million is payable to the US firm. Please. Shh. Full silence. Please, can I proceed? Now, the payment is due on June 1. Now it is March 1, April, May, June. 3 months hence it is payable. Spot dollar to pound rate is 1.5765. Can you read the quotation for me? 1 pound is equal to $1.5765. The quote given is direct quote or indirect quote? Indirect quote. They did not give the quotation for the foreign currency. They gave the quotation for what? Home currency. I always said that in UK, whether it is option contracts, whether it is what? The forwards, everything, they'll be giving only for the pound sterling. Always UK problem is somewhat unique. We saw this in the options chapter also, right or not? Now, next is, and the 3 months forward rate is 1.5685. Liffey dollar to pound futures are trading at 1.5695. Explain how the firm can hedge its payables by using futures. On June 1, the dollar to pound spot rate turns out to be 1.5875 and the June future price 1.5850. Explain why the future hedge did not turn out to be perfect hedge. In retrospect, would a forward hedge have been better? Is a question that has been asked. Okay, now everything known to you, but why I am doing is, always when you look at foreign currency in the exams or the problems, you feel somewhat uncomfortable. That too when they merge a future, spot, so many rates are given, one should be having a comfort level of doing it. Just to get that comfort level only we are doing. I am not discussing any great new concept, already all have been discussed. Can I proceed or not? Now, please, I'll just give you 2 minutes time. Don't go through the solution. Please go through the question for whatever number given. Then we can just start doing the solution together. Please. So please go through the problem quickly. Shall I proceed? Okay. Take the sheet. Now, elaborately solution has been given. Understand number by number, line by line. No need to write it. Just put a tick against each and every number after we are completed discussing. Please put your mind into it. Always learning through the printed solution is difficult than actually doing it. I already know it. That's why we do mostly through calculation. Just to save some time in the last class, I given you this. Can I start or not? Now, please tell me. UK firm is having an exposure. Tell me how much is the exposure amount? 6, that is $6 million. That means 6 million means how many dollars? $60 lakh is the exposure. Now, can I start now? $60 lakh. Now, they given spot rate. What is spot rate? 1 pound is equal to $1.5765. That is, today I can buy a pound at how many dollars? $1.5765. Or today if I want to buy a dollar, I can buy it how many pounds? 1 by 1.5765 pounds. Everybody, yes or no? Now, next is forward rate. 1 pound is equal to $1.5685. What is the meaning of this? Today, if I go for the contract, I agree to buy or sell the pound at how many dollars? 1.5685. This is the forward rate. Next, futures. Futures is also similar to what? Forward. It is similar to forward only, except that forward is settled through delivery. Futures contracts are settled otherwise than delivery. You just give a counter, buy and sell and come out. But the hedging will happen, but not as perfectly as a forward hedging. Remember it or not? Now, tell me what is the futures price given? 1.5695. Today I agreed for a pound rate to be how many dollars? 1.5695. Now, on June 1, the date in which I have to settle my importer, on June 1, the actual settlement date, what was the exchange rate actually happening? 1.5875 is a spot rate. On June 1, in futures market also a price should be trading or not? What the futures price on the maturity date? 1.5850. My first question is, all this number, what they are? Everybody able to understand or not? Now, just to confirm, tell me, what is 1.5875? Solba. That means on June 1, actually the pound is trading at 1.5875. What is 1.5850? Futures rate. On June 1, the futures is trading at that particular price. In a parallel following or not? Now, these are all the details given. Now, let us discuss and then go for the sheet. Tell me, you are having a dollar receivable or dollar payable? Dollar payable. You are going to buy dollar or sell dollar? Buy dollar. You are going to buy dollar tomorrow. If it is a dollar futures, I'll be going for what? Buy futures. I go for a forward buy, I have to go for what? Buy futures. If the dollar future, I have to go for what? Buy futures. Tell me, the futures contract is given for a dollar, pound, pound. They are given the quotation for the pound and not for what? Dollar. So when you don't go for a buy dollar future, buying dollar means what? Selling pound. Tell me the future strategy. I should go for sell pound, selling futures. That's point number 1. Yes or no? Everybody following up? No. And one more thing is, always in the LIFI is the futures exchange in London. In LIFI, always a contract size for the pound is 62,500 pound. It is standard number. Everybody should be knowing it. What is standard contract size in LIFI? 62,500 pounds is the standard contract size. In a futures, always traded what? Standard contract size. Everybody, can we start or not? Now, look at the solution. Option 1 is what hedging? Futures hedging. In UK, the quote will be given for home currency pound and not for the foreign currency dollar. Please apply your mind. Following the first point or not? No. Next. UK firm having payable exposure in foreign currency dollar, hence it should normally go for what? Buy dollar futures. Since the LIFI trades pound futures, we should go for sell pound future. Now buying dollar is same as what? Selling the pounds. I think you are understanding or not? Now, if not, stop and ask me. Are you following up? So, tell me the strategy. I'm going to go for what? Sell pound futures. Next. Quantity of pound futures to be sold. Very simple. I have to go for how many dollars future buy? $6 lakh. I have to go for how many dollars here? $60 lakh. Yes or no? Now, $60 lakh buying. Now, how many equivalent pounds I should be selling? Yes or no? I should be knowing or not? Now, that means the $60 lakh should be divided by the exchange rate. Indirect quote, right or not? It should be divided by spot rate, futures price, future price, because I am just going to sell in which market? Futures market. If I sell in fish market, I go for what price? Fish price. If I sell in what? Vegetable market, divided by what price? Vegetable price. I go for what market? Futures market, divided by what price? Future price. We discussed this in index also earlier, right or not? Now, so now tell me, 60 lakhs should be divided by, tell me what is the futures price today? 1.5695. Everybody, right or not? Now, don't look at the sheet, take the calculator. Please take the calculator. Tell me 60 lakhs divided by what? 1.5695. Tell me the divided number. What is 6 lakh divided number? 38,22,873. So I have to sell how many pounds? 38,22,873. It is as good as selling how many dollars? $60 lakh in the futures market. Response is or no? Now, can I sell 38,22,873? No, because future contract does not trade in individual units. It trades in what? Lots. The Liffey future lot size is what? 62,500 pounds. Response is or no? Now, in that case, 38 lakhs 22,873 divided by what? 62,500 pounds. How many pound contract? 61 contracts is going to be used. Everybody understanding it or not? Now, rounding off is only our choice. Always round off to the nearest decimal so that no overhedging or underhedging is so much done. 61 contracts is going to be shorted. So now tell me, what is my strategy? Short what futures? Pound futures. How many contract? 61 contract. Every contract size is 62,500 pounds. Everybody understood or not? Now, next. Strategy in futures market is sell 61 pound sterling contracts. That is 61 into 62,500 gives how many pound? 38,12,500. And 1 pound is equal to $1.5695. Can I proceed? See. On maturity date, before that, tell me what is my position in futures market? I have sold how many pounds? 38,12,500 pounds. Or how many contract? 61 contract. 1 pound is sold for how many dollars? $1.5695. This is the futures portion I have taken in the futures market, right or not? Now, come to the next step. On which date? June 1. Should I be in the futures market throughout, or can I exit early? Exit early. I can exit whenever I want by giving a counter buy. Okay, on June 1, let us see what happens. On June 1, I have to pay my importer or not? How many, let's say, dollars? $60 lakh. I have to buy the dollar what rate? Spot rate. What the spot rate? 1.5875. On June 1, the spot rate is 1.5875. So, approach bank and buy how many dollars? $60 lakh at spot rate prevailing on the date of $1 is equal to 1.5875. So, $60 lakh divided by what? 1.5875. He is going to give me how many pounds here? 37,79,527 pounds. In other words, I go to the bank on 1st June, give how many pounds? 37,79,527 pounds, and then buy how many dollars? $60 lakhs. Settle my supplier. Response yes or no? No. This is over, or I should continue? Continue. I have a position in what market? Futures market. Go to the futures market. Now tell me, at present, I am having a buy futures or sell futures or sell future. Pound sterling 38 lakh 12,500 pounds into dollar 1.5695 is the current sell futures amount. Respond yes or no? No. I come out by giving what? A counter buy. Tell me what is the counter buying rate? 1.5850. So I have agreed to sell at 1.5695. Agreed to buy at what? 1.5850. Tell me I am having a profit or loss? Loss. The loss will be in dollar or pound or dollar. The loss is going to be how many dollars here? $59,094 is going to be the loss. Respond yes or no? Rumba simple, yeah. I have to sell the dollars, a pound at $1.5695. I have to buy the same pound at what? 1.5850. I have a loss per pound so many dollars into so many pound gives you $59,094. My question is, my gain or loss is in home currency or foreign currency or foreign currency? Yes or no? Now, in my margin account, I have a loss or not? I should put the money in the margin account or not? Now, I should put the money in the margin account in which currency? Foreign currency. How to put the dollar money in the margin account? Buy dollar and put it. Yes or no? Correct. See, futures market, loss is there. Future market, what is there here? Loss is there. When loss is there, I have to put money in the margin account to settle the loss or not? And don't say mark to market. When you do mark to market, I don't know the rates. Mark to market may happen on daily basis dollar. Suppose my margin account asks me money only on the last day, other assumption, then I have to buy the dollars and put in the margin account or not. Now I buy how many dollars? $59,094. At what rate? Spot rate. How much? Yeah, 1.5875. So 59,094 divided by 1.5875 gives you pound sterling 37,224. This is the amount I have to pay to settle my futures loss. Respond, yes or no? That means my total payment is, outflow in cash market is 37 lakhs and odd. We just pay to what? Bank to buy 60 lakh dollars. I also pay to what? Futures market a loss which is settled at so much money. My total outflow for this problem is how much? 38 lakh 16,751 is the pound I have to pay to buy how many dollar? 60 lakh dollar and settle my supply. This is the cost under what option? Futures option. Tell me yes or no. Today I think momentum I am not sure. Are you following? Yes, sir. Can I proceed further? Now, this is under what contract? Futures contract. I have another option. What is the other option? Forward. Tell me. In case of forward, today itself I agree to buy the dollar at how many percent rate here? 1 pound is equal to 1.5685. Forward is given or not? It is very simple. Under forward hedging, the exposure is how many dollars? 60 lakh dollars. The forward rate is 1.5685. Since it is indirect code, don't multiply. What you should do? Divide it. 60 lakhs divided by 1.5685 gives you 38 lakhs 25,310. My question is, which is cheaper? Paying 38 lakh 25,310 to buy the dollars or 38 lakh 16,751? 38 lakh 16,751. Futures, it gives you what? Lowest pound outflow. We should be selecting what? Futures is the answer for this particular problem. Respond. Are you all following? Yes or no? No. And one question is, why futures hedging may not be perfect? Because I cannot hedge my full exposure. I can hedge only what? A part of it due to the standardized contract size. Moreover, the cash market movement and futures market movement may not be exactly same. That is why futures price can be different than the spot price, and hedging can be somewhat less effective than the normal forward hedging. Everybody understood or not? Now, with this we complete the solution to this particular problem. Everybody, yes or no? Can I move to the next problem or not? Now, see. Now, I'll come to the question number 10 and 11 later. Those are all very simple answering questions only. Same type of sum has been given in the current RTP. That sum is also there in our practice problem segment. And I gave you one sheet on that day. Do you all remember or not? In the sheet, I gave you interest rate collars, interest rate swap, one problem. 4 problems I gave, in which 3 has been already done by us. The 4th problem is about what? Currency futures hedging only. That problem will be doing it. If you don't have that sheet, no problem. The same problem is there in the workbook also. I did not notice it in the practice problem segment. Can I proceed or not? No. Take the workbook. Okay. Take question number 2. This question which I am going to read is a current RTP question also. That means I have included it already because it was there in one of the previous RTPs. It is once again given, so has got lot of chance of being asked in the examination. So question number 2, page number 119. Answer is also typed. We can just do it together. Can I proceed or not? Question number 2, page number 119. Please. Shh. Which solutions? Are you all comfortable in understanding the concept? Huh? Everybody yes or no? Okay. Please. XYZ Limited is an export-oriented business house based in Mumbai. The company invoices its customers in customers' currency. Its receipt of US dollar 1 lakh is due in September 1, 2009. Tell me, what is the home currency? What is the foreign currency? Rupees is the home currency. Dollars is the foreign currency. Next question, is the dollar receivable or payable? The dollar is what? Receivable. So we having a exposure receivable. When the dollar is receivable? September 1, 2009, the 1 lakh dollar is receivable. Up to this question, understood or not? No. Next step. Market information on June 1. Today is what? June 1 are as follows. Exchange rates given US dollar to rupees. Can you tell me they are given you direct quote or indirect quote? Indirect. They are going what quote? Indirect quote. 1 rupee is equal to 0.0214 $0 is a spot rate. 1 month forward given, and then what? 3 months forward. I want 1 month forward or 3 months forward? 3 months forward, because I am now in June. I want to hedge on what? September. You should be selecting what? 3 months forward rate. Everybody yes or no? When I read the question, apply your mind and read. Can I see? Now come to right hand side. Currency futures contract size. Rupee, how much rupee is 4,72,000 rupees is a contract. What the contract say? 4,72,000 rupees. How we had the 62,500 pounds as a contract size. We have the contract size in what? Rupees. That means tell me we are going to trade in rupee futures or dollar futures or rupee future. It is something ditto to the last problem. Yes or no? Last problem the home currency was pound. This problem the home currency is what? Rupees. Everybody can I proceed or not? Now next is June futures given, September futures given. June futures 0.02126. I want you to understand what is this number. 1 is equal to what? 1 rupee is equal to $0.02126. September is what? 1 rupee is equal to $0.02118. Respond yes or no. Now, will you select June futures or September futures? September, because June future would have been what? Expired by the time you go for the contract. So no, I go for what future? September future, which will be alive at the time of hedging. Respond yes or no. In that case, I go for what future? September future. Put a tick against this number, because other numbers you need not unnecessarily read. Now, go to the next. I am screaming, I am shouting, I want to gain your attention, I want to have a grip for what is being discussed. If you don't have grip, no problem, I will do it. Are you following? Okay, please. Initial margin, we have to deposit money or not? Initial margin for June futures is 10,000. Sometimes how much is here? 15,000. So I select 10%, say 10,000, 15,000, 15,000. And 3 months interest rate is how much percent? 8% is the interest rate. There is one extra adjustment in this problem. Can I proceed or not? Now, next. On September 1, 2005, the spot rate of US dollar to rupee is 0.02133. On currency future rate is that is 02134. That's a typing mistake. 0.02134. As 0 should be added. Okay, 0.02134. Can you make a change or not? Now, come on, which of the following methods would be most advantageous? Using forward contract, using currency futures, not hedging at all. It may be assumed that variation in margin would be settled on the maturity. That is, when the variation margin, you have to put the money or not. So whatever money you have to put in will be settled only on what? Maturity date. One time conversion enough, something similar to the last sum. Last sum did not say this sum, what they explicitly said for you to avoid the confusion. Everybody is so no. Now, this is the problem. These problems can be asked for around 8 marks in the examination. Everybody following or not? Now, I want you to do one thing compulsorily. All sums which are given in practice problems are good sums in the foreign exchange. All the sums you should be practicing it. Mostly from one of the sums only it may be asked in the examination. Can I be or not? Already IFM itself I gave you a lot of practice sum. Yes or no? This all practice sum. Continue with what? Options and futures in the forex management. Can I be now? Can you start doing the problem? Now, first option is what? Forward contract. Very simple. What is the rupee inflow? How many dollars I am going to sell? $1 lakh. On September 1 lakh dollars will be sold for how much rupee they are given? $1 is equal to 0.02127. This is a direct quote or indirect quote? Indirect quote. Multiply or divide? Divide. Because 1 rupee is equal to so many dollars. $1 lakh will be how many rupees here? I have to divide it. Respond yes or no. In that case, please tell me it is 1 lakh divided by what? 1.02127. Or you observing the numbers from the problem and writing or not? Now, tell me what is the rupee realization? 47 lakh 14,147. If I go for forward hedging, I get 47 lakhs and 47 lakhs 1,457 is the money in my hand. Everybody, are you following or not? Now, this is option number 1. What option number 2? Futures hedging. Now, don't look at the solution. Tell me, I have a foreign currency receivable or payable? Receivable. I am going to buy dollar tomorrow or sell dollar tomorrow? I am going to sell dollar. Is the futures dollar futures? No. I am going to have what? Rupee future. When I am going to sell dollar futures, what I have to do? Buy rupee futures. Respond. Yes or no? It is something similar to the last sum. Last sum is payable. The sum is what? Receivable. That's the only change. I am going to go for what? Buy rupee futures. I am going to go for what? Buy rupee futures. Can I proceed or not? Now, let us see how to do it. Now, futures contract selected. What futures should be selected? September futures. That's how the answer can be presented very logically. Okay, next. September futures price. Tell me, what is September future price? 1 rupee is equal to $0.02118. Now I say RTP very clustered. Cumbersome answer is given. If you write like this, you will not be getting confused when I select the numbers. Can I say? Next is futures buy or sell. Tell me, since we are going to sell dollars on September, we want to have a guaranteed dollar selling price or rupee buying price. Hence you go for what? Buy rupee futures. So point number 3, everybody able to follow or not? Now, next is amount of rupee futures to be bought. How many dollars I am going to sell? $1 lakh. So many equivalent rupees have to buy or not? Now, I should use what rate? Spot rate, forward rate, futures rate? Why not spot and forward rate? I am not selling in spot market. I am not selling in what? Forward market. I am going for what? Futures market. So divided by what price? Future price. I am dividing because of indirect code. Respond yes or no. In that case, it is 1 lakh divided by. Tell me, what is the future price? Last page you have ticked on. What is the future price here? 0.02118. So tell me, how many rupee futures should be bought here? 47,21,435 rupees I have to buy. I have to buy how many rupees here? 47,21,435 rupees. This is the amount of rupees I have agreed to buy. Yes or no? What I am saying? Now, can I buy so much rupees or not? No. Because this rupees should be divided by what? Contract size. What the contract size? 4,72,000. It is very simple. How many contracts here? 10 contracts. Exactly dividing just for a small number. How many contracts? 10 contracts. Now strategy is buy. Please tell me, buy what? 10 September rupee futures contract at how many dollars? $0.02118. Every rupee I agreed to buy at how many dollars? $0.02118. On which date? September end. Like that, how many contracts? 10 contracts. A contract is for 4,70,000 rupees. 10 contracts is how many rupees? Yeah, 47,20,000 rupees. I agreed to buy at such a dollar rate. Respond. Are you following what I am saying? Tell me yes or no. Now, next is. Now, everything is over today. The next date is what? September 1. I go for September 1. Okay. Now, on September 1, let us go for the futures market. I agreed to buy rupee at how many dollars? 0.02118. On September 1, tell me, what is the future price actually quoted? 0.02134. I change the number to 0.02134. Change or not? Now tell me, I bought at 0.02118 the rupee. How does it what? 0.02134. Tell me, that's a profit or loss of profit. For every rupee, I am gaining how many dollars? $0.00016. Each rupee is giving me $0.00016 gain. Yes, point. Are you following what I am saying? Okay. You can see, huh? Okay, no problem. Now, in that case, see. So, one contract is going to have how many rupees? 4,72,000 rupees into $0.116 gives you, a contract gives you $75.52 profit. Yes or no? Like they have one contract and 10 contracts on 10 contract. The profit is how much? Yeah, $755.2 is the profit. Yes or no? Now, my profit in the futures market is in home currency rupees or foreign currency dollars or foreign currency dollar. The money in my margin account in dollar should be converted back to what? Rupees. Because I have the margin account money in what? Dollars. I want to convert it into rupees. I converted rupees as spot rate, a future spot rate, a future spot rate. What is the future spot rate? Tell me how many days? 0.02133. So what happens is it is converted into rupees 755.20 into 1 by 0.02133 indirect code. I get how much rupees profit? 35,406 rupees I get as profit. Point number 1. Yes or no? Now, this is the futures market close. Yes or no? Now, on the date I am going to sell dollars or not? Now, Apart from that, margin money I'm having or not, in that I'm going to lose some interest or not. Yes, I deposit 15,000 rupees in the margin account. The margin account will not give me what? Any interest. I would have borrowed money, deposit in the margin account. The exchange says deposit 15,000. Will I print and deposit? No. I'm going to what? Borrow money, deposit in the margin account. May say, sir, the account will be always debited creditor, but here I say variation margin booked in only one time. In that case, I lose 8% interest on the money or not. So 15,000 rupees margin account amount on which I lose what? 8% interest. For how many months? 3 months. This is for one contract. For how many contracts? 10 contracts. 3,000 rupees is the interest cost on money deposit in the margin account. Respond, yes or no? No. Apart from that, conversion of dollars to rupees. $1 lakh I get on September 1. I convert into rupees using the rate 0.02133. I get how much rupees? 46,88,233. Number right above. Now, what happens is, this is an inflow. 35,406 is what? Another inflow. This interest is what? Outflow. 46,88,233 plus 35,406 minus what? 3,000. What the futures amount? 47,20,639. Yes or no? Now, we have the forward answer also over. What is the forward answer? 47 lakhs 1,457. Is 47 lakhs 20,639. Up to which is better here? Futures. If I do nothing, no hedging, now what happens? On September 1, $1 lakh sold at 0.02133 exchange rate. I'll be getting 46 lakhs 88,233. Out of the three, which is advantageous? Future is the answer for this particular sum. Everybody understanding it or not? Please tell me yes or no. No. With this we complete the solution to this particular problem. This is the current RTP question. Can I proceed or not? No. See, here I want you to do all these sums. Okay. One sum is forward versus money market versus futures. This problem is what? Forward versus futures versus no hedging. Like that, different types of futures arbitrage. Different types of problems are what? Given. All sums are being given with the explanation properly. Please go through the sums quickly. Everybody following or not? Now. So all problems I expect you to solve it. We'll do 2 more problems in the workbook. Okay, that is question number 9 over now. We have to complete question number 10 and question number 11. Let us complete those 2 sums before we wind up this area called as currency futures. Okay, now please take question number 10. Take question number 10. Are you all understanding the spirit of the currency futures discussion or not? Now take question number 10. The corporate treasurer of a US multinational receives a fax on 21st February from European subsidiary. The subsidiary will transfer 10 million to the parent company on 16th August. The corporate treasurer decides to hedge the position using currency futures. Available spot and futures rate for the euro on 21st February are as follows. Spot euro, 1 euro, dollar 1.06. September futures, 1 euro, 1 dollar. December future, 1 euro, 1.6 dollar. This is a spot rate. This is an agreed rate for a September transaction. This is an agreed rate for what? Yeah, December transaction. What expiry month will be chosen for the futures by the corporate treasurer? Will the corporate treasurer go long or short on euro futures? If the corporate treasurer plans to hedge through futures in European currency market, will he buy or sell dollar futures? What is the unhedged outcome in 16th August? If the spot and future rate on 16th August are as follows, and the numbers are given. Okay, just 1 minute time I'll give you. Please go through the question before you start answering it. No need to write the solution, is there in the sheet itself. Okay, now please go through the question quickly. Pandiyajan. AC bar. Shall I proceed? Now, first of all of you tell me, which is the home currency, which is the foreign currency? US dollar is the home currency and euro is the foreign currency. US company is going to receive euro, pay euro, receive euro. It is going to go for what? Receipt of euro. It is having a future receivables in euro. Point number one. Yes or no? No. They ask you the question one by one. First of all, I go for euro futures or not? Yes, I am going to receive euro on which month? 16th August. Will I select September futures or December future? You can select both, but it is appropriate to go for what? September. That is near our 16th August. You go for December future, the maturity date is far away from what? My requirement date. The basis will be higher. Yes or no? But September future will be what? Closely to convergence. Everybody following not? Now, on the first two question, what are the question here? What expiry month will be chosen for the futures by the corporate treasurer? What month should be chosen here? September futures. Point number one. First two question answered. Everybody understood or not? Now, next step. Will the corporate treasurer go long or short on euro futures? Tell me, you are going to receive euro, pay euro on 16 August. Receive euro. Receiving euro means selling euro, buying euro, selling euro. You go for buy euro future, sell euro future, sell euro future. The answer is, will the corporate treasurer go for long or short? Short. The answer is what? Go for short euro futures. Respond, yes or no? No. Third question, point C is, suppose he does not want to go for euro futures, he wants to hedge in the European market. In European market, they give what future? Dollar futures. They give what futures? Dollar future. In that case, tell me, you will go for long dollars or short dollars or long dollar. If you are going to short euro, you are going to go for what? Long dollar. So, first three questions A, B, C has been answered. Everybody understood or not? No. So, question 10 we are answering. Part A is, treasurer should choose September euro futures because the contract only matures near to the date of requirement, that is August 16. Reason for selecting nearest expiring month is that it will be very close to the spot rate due to the convergence. If we take December future, it will be far away from the August 16. First answer. Part B, US company will have been receiving euro on August 16, would like to go for forward sell. Instead of hedging using forward, it uses what? Future. In the portion should be what? Futures market is sell futures. Part A, part B has been answered. Part C is, if treasurer wants to hedge using dollar future, you should go take a long position, buy dollar future, because August 16 selling euro means what? Buying dollars. Part A, part B and part C is over. Yes or no? Now, suppose you go for the euro futures. What happened is, on August 16, unhedged outcome. If I don't go for futures, if I don't go for what? Future, what the outcome? Can I put or not? Now, if I don't go for the futures, tell me, I am going to sell how many million euros? 10 million euros I am going to sell at what rate? 1.01. This is the actual future spot rate on the date. Yes or no? In that case, if I don't go for any hedging, I will be getting how many dollars in hand here? 101 lakh dollars will be got in hand, because 10 million euro into what? Dollar 1.1 gives you 101 dollars. Respond yes or no. Next. Suppose I go for the futures market. What is going to happen is, cash market, I am going to receive $101. How many dollars here? $101, because 100 lakh euros, that is what? 10 million euros means what? 100 lakh euro sold at $1.01. I get how many dollars? 101 lakh dollars. But in futures market, I sold futures for what? $1. I am going to give a counter buy at what? $1.02. I am going to have a gain or loss or loss. Or how many dollars? $0.02 per euro. And the loss is for 100 lakh euro. If I want to hedge it, it's going to be how much here? 2 lakh. The amount I receive in hand is 101 minus what? 2 lakh is how many lakhs here? 99 lakh. Which is better? Unhedged or futures? Unhedged may seem to be better, but this is certain, that is what? Uncertain is the issue. Everybody, are you following what I am saying? No. With this, we have completed the solution to question number 10 in the workbook. Are you following or not? No. One more problem is what? Question number 11. With that, we will complete this currency futures. Take question number 11. On a certain day in February, speculator observes the following prices in foreign exchange and currency futures market. Spot rate 1 pound 1.6465, March futures, September futures, December futures. Speculator thinks that the markets are overestimating the weakness of sterling against the dollar. How can she act on, say, on this view to make a profit? Okay, I'll tell you the question. Tell me. Market is pricing 1 pound as how many dollars in spot? 1.6465. Today itself the market says in March 1 pound is quoting at what? 1.6425. Like that, if you see, my question is the pound value increasing or decreasing or decreasing? Today, the banks and all is quoting higher value for the pound today. For the same pound forward or future, they are quoting what? Lower value. That means the market is believing that the pound is going to weaken in what? Future dates. Hence the pound rates are weakening. This may be due to interest rate, etc. Respond. Yes or no? No. You as an analyst believes that the market is overestimating the weakness. Is what? Overestimating the weakness. That is, the pound is not as weak. The pound is not what? As weak. The pound rate is expected to be what? Higher than what is actually quoted. No. Tell me, in that case, you are going to go for a future buyer, future seller, speculator. Tell me. Don't answer. Now tell me, you believe that pound is overpriced, underpriced? You believe the pound is overpriced, underpriced, underpriced. You are overestimating the weakness market. So the pound is not going to depreciate as much. You believe the pound is what? Underpriced. Something is underpriced means we are going to buy or sell. Buy. I am going to go for what? Buy pound futures to make the profit. Everybody understanding it? Yes or no? No. So look at the answer. Question number 11. From the future prices quoted, it is evident that market is expecting the pound to decrease in value. Now, however, we believe that the market is overestimating the weakness in the pound. That is, the pound will not decrease so much in value. Hence, as per our assessment, the pound future is underpriced. We should go for long on pound futures or buy futures. Is answer for question number 11. Please tell me, everybody understanding or not? Now, we had some idea about how to do the problem using the futures hedging, and I have done all the futures currency problem except for one sum, question number 7, ditto same as question number 8, which I gave as what? Homework. But my requirement is all the sums in the workbook should be solved, including the practice problems. That problem can be straight away lifted and been asked in the examination also. Any doubt you have, you can just ask me. I'll give you the number at the end of today's class. When you solve these sums, have any doubt, that can be always asked. Everybody following or not? Now, with this, we have completed this particular chapter called as currency futures. Okay.